All right, well, let's expand on that discussion. Following the announcement by the governor, we ask what difference this makes in your pocket as we head into the festive season, right? Are you seeing this as a reprieve, or do you simply not see the difference in your own budget? Send us a WhatsApp on 072-110-5584 or give us a call on 010-594-6010. Well, we're going to have a conversation. We're taking it forward now. We're joined in studio by Ted Koza, which is the Township Economy Development CEO. Juliet Miabo, good evening to you.
Yes.
Thank you so much for joining us. We also are joined by the National Stockful Association of South Africa's CFO, Ntsika Masondo. Good evening to you. Thank you so much for joining us. An incredibly important discussion, of course, around how our own township economies are leveraging on some of these interest rates. Dumiso Hadebe is an economist. He'll give us some of the education, I suppose, on how all of this works. Via video link, we're joined by Annelien van der Poel from Debt Rescue. We're also joined by the Soweto Business Forum's Deputy President, Balesa Kambula, as well as FEDUSA General Secretary, Rifta Ajam. So let's start off in studio, guys. Thank you so much. A good evening to you.
Good evening.
I don't think there was too much of a surprise that we'd get a drop in interest rates, right? But I saw quite a few calls being made, and we'll even hear from FEDUSA in a moment, even by Labour, saying, well, 25 basis points simply isn't enough. Give us more. Dumiso, I'll let you as the economist really lay the ground for us here. How we got here, is it enough? And what opportunity does this present for our economy?
Thank you, Naledi, and I think you're quite correct. It was anticipated, the 25 basis point cut was indeed anticipated, although for many consumers, perhaps a much more sort of aggressive cut would have been more welcomed. But this is really in the context of what we've seen around the world, particularly with countries that South Africa is heavily affected by. Here we're talking about the likes of the US, the UK, India, China, and so forth, whereby on a trade-weighted basis, the trade flows that take place between those two countries impact prices and import prices quite significantly. We've seen also the impact of energy and oil, and of course the implications that has on energy prices and food prices in particular. The elevated levels of inflation that we've seen over the last while has been particularly because of food prices. And one of the reasons why we're starting to see this gradual decline in terms of repo rate cuts is because we're starting to see the cooling in terms of the increase in food prices. And this has been largely attributed to sort of the relatively stable and declining levels of energy prices that we've seen over the past 2 months or so.
Yeah.
And so that is what is contributing to it in terms of the macro forces and, of course, the implications in terms of a South Africa domestic level forces.
It's so, I know, like, it's difficult to follow, because here's the reality is that there is so much jargon. And so even when you see Governor Lesetja Kganyago making the announcement, a lot of people in South Africa might very well just wait for the news to tell them, okay, what's the number? Because it's so difficult to understand the mathematics. But I think perhaps to give us some context, right, as you try and explain it for South Africans, during COVID-19, where energy costs were just haywire, right? Because very little people were moving. You saw petroleum, for instance, the pricing just completely hitting a low. So talk to us about the difference then of what the Reserve Bank did with interest rates, and now that we're recovering, why this approach? Perhaps that's a good way of comparing.
It certainly is. And I think COVID is a great example, particularly because of very, very low energy prices and low economic activity. Typically, interest rates are used to either cool down an economy or to accelerate the growth in the economy. So now, in this instance, part of what we've seen, the instrument of interest rates, because we've seen the cost of living increasing at a rate that is not necessarily acceptable, interest rates are used to sort of cool down spending. By cooling down the economy, it means just cooling down spending. So you and I are more cautious around taking another line of credit or spending an extra 100 rand for coffee wherever you might be, and so forth. And so that is an attempt to sort of cool down the economy. And the resultant impact that has is that it then gradually slows down the cost of prices going up.
Yeah.
That's when you start seeing inflation going down. The jargon then comes in around inflation then going down and so forth. So it's an instrument that is used to either ensure that the economy picks up or it cools down, really in more simple terms.
Okay, I think I'm following that. I think I'm getting that. But let's bring in our guests via Zoom, because we're also joined by Annelien van der Poel, who's with Debt Rescue. Annelien, a good evening to you. the reason why we thought it would be a great idea to have you on is because we hear over and over again, South Africa is an overly indebted nation, right? That South Africans rely so heavily on debt. And so the impact of interest rates is actually felt by many South Africans, whether or not they pay attention to it because of how reliant we are on debt. Is that correct, Annalene?
Absolutely. I mean, we are most definitely sitting with a massive cost of living crisis. And as you know, we're aware that we've had, on your budget, your average consumer budget, you've got two major factors that come into play. On the one side, on your expense side, where we see the impact of inflation on our daily cost of living, the cost of living crisis, goods are continuing to increase in costs. And on the other side, we've seen the interest rate hikes sitting at record highs, and that means our debt becomes more expensive. So for your average consumer out there, we are being affected in both parts of our budget, and it's placing enormous strain on households.
Yeah.
So when we do see this, it's absolutely, it's devastating out there at the moment.
Yeah. Just before we do that, I quickly want to hear from Labour, if you'll allow me. Rifta, you're with Fedusa, and one of the things that we heard even in September is you said 25 basis points simply isn't enough. Where are you with this announcement today as Labour?
Well, good evening to all the guests in studio and online. Whilst we welcome the reduction in the rate, the overall value, that magic number that we're looking for, we believe that there could have been far more room. The governor had been a bit modest and conservative in terms of the approach, and while we understand the mandate of the governor at this stage to maintain price stability, we want to believe that a greater reach would have brought much more greater relief to cash-strapped workers who have endured multiple rate increases. We need to understand the consequences and the impacts of what those interest rate hikes have meant for workers who have already been cut at their knees in terms of the hardships that they have endured as a result of COVID, that one of the guests had equally outlined here. So we need to take into account, whilst a balancing approach is necessitated, we also have to be cognizant and consider the broader economic and social consequences of these decisions, and ultimately to prioritize the needs of ordinary working South African citizens who are already facing that very cost of living crisis over and above unemployment. So it is desperation that is forcing consumers and workers into one area, managing the bonds and many other commitments. And whilst this brings relief, we want to believe that on the back of the downward revision of inflation, the governor and his team could have been just a little bit more considerate. So we welcome the decision, but it would have just been a greater relief on the back of us going into the festive season.
Yeah. Juliet, I want to bring you in here.
Yes, please.
Because you're with the Township Economy Development Community of South Africa, and, you know, we talk so much, especially in the past few months, right, about stimulation for the township economy, so important. And then there's the question around, well, whether township individuals and even business entities even have access to the sort of credit that brings about real development. And so when we talk about interest rate hikes, is it felt by the township economy, in your view?
It's actually important, and it's actually going to help in a bigger scheme of things, and it's supposed to. But already in the township economy space, a lot of SMMEs are marginalized by the big banks. That is why a lot of them rely on government. So what it means for township economy and businesses is that they should be able to have access. Now they have a case to have access to funding or to loans. So, but now whether the financial institutions are willing to actually realize that, then that means the SMEs, there's more money out there, they will be able to afford to pay, to repay their loans. It's something else, because it's also the mindset of how the township economy is viewed by the financial institution. But what it also means that consumers will have more money in their pockets. So hopefully that will then mean that people do not have to go and find funds and get loans. They will then have more people buying their products. They'll have more people buying their services. Then hopefully that will reduce the need for loans and so forth. But we live in an environment where financial institutions have not been very friendly to township businesses. You know, they call it a high risk factor, yet they know that that is an area that accounts for more than 100 billion rands in South Africa's GDP, but yet they call it high risk. But at the same time, the very private sector will come into the township economy to actually extract resources. So we know that high risk at that point. But we're just excited that it means more people will have a little bit of change in their pockets. And with the changes and the transformation that is happening, hopefully it will happen smoothly without any uprising and unrest. Then means that then people will start supporting local businesses. So that means the local businesses who will be taking on the shops, who will now be able to sell their products within the markets, not just the township market, but the broader market will have markets and consumers that have a bit of money. Because one of the problems is people produce, people have services, but our consumers' cost of living has been too high. People cannot afford those products.
Yeah, and Palesa, I'm going to bring you in here because I imagine that you'd agree with what we've heard from Juliet, you with the Soweto Business Forum. I'm keen to hear if your members in Soweto have actually accessed loans and credit for their businesses. So when we talk about interest rates cuts and there's some relief, if businesses in the township are feeling that relief, if they're able to access those products from financial institutions.
Oh, yes. Good evening, everyone. Yes, our members are very much excited. All of us, in fact, we are happy for this breather. Since COVID, after COVID, everything was just too high for everyone. So it was very difficult especially for small businesses. What we have looked at also that we are excited when it comes to the issue of the properties around Soweto. As you know, there was this project that is currently booming for people that are going into properties and into renting. So that means with this cut, definitely there's going to be more people that will be able to afford even just to rent around the township, because even to buy around the township. Yes, the banks of what my colleague just said, they always say businesses from townships are high risk, whereas they are the one that's got a bigger turnover in the country. But then we are happy, and we know that as much as it's still a breather, but there is a possibility of electricity and food rising soon on the same issue as the government was then saying. But then for now, we are happy and we accept this as the community of Soweto.
Yeah.
Thank you.
Thank you for that. Ntsika, let me bring you in here. Because what you guys have been able to do is, I suppose, really leverage off of what already has been built by financial systems in our communities, in our rural communities, or Mama coming together with a stokvel and saying, let's pool money together. What a system, right? It's educated people in our communities. That's the reality. But unbanked for the longest time. And so Nasasa, talk to me about the work that you do, and then when there's a cut in interest rates, does that mean less money being made by our stokvels that are banked?
No, so I think how one needs to look at it is when you look at the stokvel economy and stokvel members, it's a cash economy for the most part. So people are saving in order to buy. So around about now, we're getting ready for buying season, you know. Some of Juliet's people and some of Palesa's people will be getting the benefits of the savings during the year. So for us, what's been exciting that Dumiso touched on is the cooling, because our members save over the year. And then towards the end of the year, that's when basically they'll cash out. So I think that speaks that. But then there's also long-term. So if you look at burial societies and you look at investment clubs, their macro picture is more long-term. And so those are the people who look at interest rate cuts and are are interested in terms of what's going to happen. So, for example, if you're a property stokvel, you've come together as people and you've bought a property together, this is good news that you just heard. However, if you are a grocery club, it is the inflation picture which is good for us in the sense that prices are more stable. So when you save, your purchasing power parity is not going down. You're able to buy as much as you could last year, or at least it's staying in the same place. So it's a positive picture, but we have to see where it goes over the next year.
Give me, you want to say something?
Yes, no, we just want to highlight that we're not happy with the fact that people are thinking consumerism. Because when you're talking stokvel, people are going to be buying groceries, things that they're going to consume in the space of a week or two over Christmas, then after that back to zero. We would rather encourage our SMMEs and other people to invest whatever additional money they have in things like property, in things like assets for their businesses. So I know he's speaking for his sector, but we actually want to send out a message to say, whatever save that you're getting, put it in and invest it in growing your business, in being ready and taking up opportunities, rather than saying, oh, I'm going to buy more clothes, I'm going to go, because that's what people want to go. And with a two-pot system, it's actually going to go to that. We have this, plus a two-pot system, a lot of money out there, but how much are people going to put back in growing and making them less dependent on loans and funding.
In the long term.
In the long term.
But I'm going to come back to you, Nzika, because what's being raised is quite interesting, right? You're correct that with stokvels, they enjoy, I suppose, the interests that come into their savings throughout the year. Then when December comes, they pull it all out. In January, they start from scratch. But there is work being done and you've mentioned the property investment, right? So talk to me about what that has looked like in the stokvel sector as we've had, the upping, then the cutting down of interest rates, and what that conversation sounds like when you're speaking to Okoko and saying, invest long term. What does it look like?
I think it's a very nuanced discussion that we're having. So I completely agree with what Juliet's saying. So the benefit of savings, a low inflation environment, it creates the conditions for saving. We have to be quite mindful, and I think Dumiso touched on this earlier, that you are dealing with a subset of people who generally come together and save in order to be able to consume, but access. So before we go into the consumption, it's not that it's gluttonous people are trying to buy more than they get. Sometimes it is about accessibility. What we've been encouraging is where the scope, like Juliet was saying, for saving, for reduced costs, the saving then goes into the long term, especially in the grocery space. When you go into your burial society space, this is money which is long term. So we are trying to work with those burial societies to say, how can your money yield more over the long term? Excuse me. So in terms of that picture, it's quite different. So it's quite a nuanced discussion depending on the objectives of the underlying stokvel groups that you are dealing with.
Yeah. Well, we're taking calls, right? Because we want to hear your questions and even your comments on this particular story. Here we go. The news comes out today. The Reserve Bank saying, okay, they're cutting the interest rate by 25 basis points. Fiducia, who is still with us, of course, represented by Rifta Ajam, saying they would have preferred to see more of a cut. But we want to hear from you, really, if you're satisfied, but also if you feel the difference, right? Are you aware of what impact this has on your life, on your pocket? And do you feel the difference? 0105940 0610 6010, sorry. Okay, I'm going to just give you the WhatsApp number, 0721105584, and then we'll bring up the telephone number on the screen. So many numbers to look at. Robson is on the line in Auchenhoek. Robson, a good evening to you.
Good evening, how are you?
Robson, good evening. Can you hear us?
Yeah, I'm good.
Yes, tell us, what are your thoughts?
Yeah, my thoughts, I'm thinking like the last time out they cut the interest rate. I went to my bank, I tried to ask if they also reduce the interest rate on my loan. But to my surprise, they said no, they don't reduce it. I don't qualify for the deduction. Even up to now, the interest rate was 21.5%. It is still the same way. So I'm not sure whether this interest rate cut is going to benefit me as a consumer. Because right now, until our people with the interest rate on the loan, the banks do not cut as the SARB. I'm not sure what can be done on that fine.
Yeah, that's a very good question, because I can imagine just how many people might be asking themselves the same question. Robson, thank you so much. Taking your calls on 010-594-6010. We've got the number. Annalene, I think this is a question for you, actually, right? So Robson calls in and says, all right, we've got this reduction in the interest rate cut, but what happens when I go back to my loan provider and say, well, where's my cut? And it simply isn't there. How is that possible, Annalene?
Well, I think you're going to have to go and look at the terms and conditions of the agreement that you entered into. Whether they for example, you might buy a vehicle and you have the option to fix the interest rate. In other words, they offer it to you and you say, okay, I don't want to have a variable, I want to have it fixed. But I think the safest is first go to your agreement, see what the terms and conditions are, and then raise it with them. I mean, most institutions have complaints departments. Start with customer service, and then obviously take it up with the complaints departments and query it and question it. I mean, there's enough authority out there that will intervene if it doesn't seem correct, and we'll be able to assist and have this resolved.
Yeah, and where there is, I suppose, a dispute. I mean, I wonder if our consumers know just at what point they're able to access a third sort of party, right? Whether it be an ombuds or others, Annalene.
Absolutely. So, I mean, it depends obviously on what agreement. But if we're talking credit agreements, we've got the National Credit Regulator, we have got the Banking Ombud, we've got the Credit Ombud. So there's a couple of avenues to look into. Like I say, just get your agreement that you signed originally, check the terms and conditions, have that on hand, and if you're unable to get resolution with the provider themselves, is to then take it up immediately with the with one of the ombuds and let them look into it. So they take these matters seriously. They do investigate it, and there's recourse.
So following the announcement by the Governor of the Reserve Bank, we're asking you this evening, what difference an interest rate cut of 25 basis points makes in your pocket? Do you feel it, especially as we head into the festive season? Taking your WhatsApps on 072-110-5584, or give us a call on this number, 010-594-6010. Let's see, maybe just two WhatsApps that have come in. Let's take a look at some of those. Dumelo Mokwari says, evening Naledi, the repo rates cut is not sufficient. This shall complement the two-part system, and consumers no doubt shall smile this festive season. Our governor, with all due respect, is not bold enough to cut repo rates by at least 50 basis points. And in the first quarter of next year, to keep them unchanged, the pie is enjoyed when it's sizable. Okay, I like that. Plans to raise energy by Eskom or aspects, I suppose that means energy costs, right? Or aspects that might make all these means effortless. Dumelo, very well thought out. Thank you so much for that. Anonymous saying nothing changes. We remain overburdened, overtaxed, dismissed by the elite, while the everyday man suffers. Frustrations on the ground. Dumelo, they're touching on prospects for 2025. Tough one. What are we looking at? More cuts 2025? Dumiso?
Yeah, so we certainly are in a rate cutting cycle. Mm-hmm. So we do anticipate more cuts going forward. And I think what we're seeing, the Reserve Bank mentioned the word cautious approach. And I think one of the reasons why they mentioned that is that, yes, we're in a rate cutting cycle, but we've seen some events taking place, for instance, in the Middle East. And those kinds of wars tend to have an effect in terms of the price of ultimately petrol being an input cost to the goods and services that you and I buy on a day-to-day basis, and ultimately increased price that we get in the stores. So provided that there's some stability globally and energy prices are not negatively affected, we do anticipate, I think, till mid next year, inflation to still be below 4%, which is still a manageable number. It's a predictable number. And so that's what things certainly look like over the short term, really, provided that there aren't any major changes on the global front. We've seen efforts from the Eskom side as well. Those administered prices play a big role in terms of the cost of goods and services that you and I pay for, depending on also how that cost factor where the management of Eskom is concerned, that's also a key input in terms of whether or not the prices of goods are affordable for you and I.
I'm thinking about how you're saying this, depending on whether or not, what things look like on the global front. Let's not forget we're moving into a Trump presidency in 2025.
Of course.
We don't know what that's going to look like for us economically, globally. But I want to bring Rifta back in here. Of course, she's General Secretary of the Federation of Unions of South Africa, or FEDUSA. Rifta, as we wind down the year going into 2025, what sort of messaging does Labour then give to the working class in the country around, well, this is what's possibly coming, this is where you need to tighten your belts? Are those conversations had with workers in the country?
It's very difficult to have these conversations when desperation is at an all-time low. There is only so much room to maneuver, and the narrative by government is that the main element of cost containment measures and other economical conversations are about debt service costs. Now, how do you begin to explain to members how to prioritize when you are just beginning to make ends meet and you come in with a whirlwind that removes all possible ends? We were looking at the rate cut, and in the spirit of addressing the balanced approach that we were speaking to earlier on, Padisa spoke about increasing public investment. We are all about increasing public investment in order to promote economic growth. And ultimately, as workers go into the season, we can only appeal to them to be absolutely cautious. Many of the callers have mentioned the aspect on the two-pot system, and it only just shows the level of desperation out there to be able to access savings at a time when you need to augment those savings over and above other aspects that have been defined here. But the lowering in the rate certainly does bring about some relief, because workers can stretch their incomes and reduce the burden of repaying debts. But at the same time, whilst the decline assists in stabilizing the cost of living and making essential goods more affordable, what we are arguing is that a greater stimulus ultimately activates the boosting of key economic sectors, and the ones that come to mind right now are retail, hospitality and tourism. And if you can recall, during COVID-19, many of your generational small businesses, whether in the townships or otherwise, have been brought to their knees or who have just died a slow death. So we want to make sure that this is a mechanism to assist in not only protecting existing jobs, but creating new ones and giving businesses an opportunity to earn more income. So as we go into the new year, we certainly want to believe that the governor takes heed of balancing the approaches in terms of the developmental aspirations of the country, including looking at the hardships that workers and consumers out there are already subjected to. So we are hoping that as we are in a rate-cutting cycle, that the next one will also be inspired by the reduction in inflation. It's at an all-time low at this stage, and we are hoping that we can continue to look at it in that vein that brings about relief for everyone, irrespective of where you sit. Those essential goods will make a difference, but at the end of the day, how do you survive when you are continuously juggling and jumping in between one crisis and the next, albeit the unemployment rate in the country? So our message is loud and clear. Do not create emergencies. Ensure that you are savvy in terms of what you may be receiving as a good Christmas present come December, but ultimately that the financial education that comes with worker education remains what we have to focus on to be able to continuously drive further growth in our sectors. It is all about education and awareness, but ultimately how we can work together and collaborate in terms of bringing about this balanced dimension.
I can tell you this, the education is so deeply needed, right? I mean, and we have such a long way in terms of speaking to our consumers and giving them financial education. But one of the things that you hope when you've got an interest rate cut is that people feel the reprieve. But if you're still over-indebted and unable to fulfill your, I suppose, your responsibilities, Annalene, in about a minute or less, if you can, when do we call debt rescue? When do we call you, Annalene?
It's actually very simple. It's a very basic math where we say if you look at your budgets and you say I can't cover my necessary living expenses as well as my minimum debt installment, I am most likely over indebted, and that's where debt counselling comes in. It's part of the National Credit Act. It's there to assist over indebted consumers.
Yeah.
Give you legal protection and the opportunity to repay your debt at a lower installment over a long period of time, become debt-free and get out of that debt cycle.
Okay, so important. Okay, we've got a WhatsApp that came in and it is talking about stock files. We're going to actually bring that up. People wanting to, I suppose, understand where opportunities are for them. There it comes up on the screen. Clement in Johannesburg saying, evening, lady. My question is for the National Stockfile Association. How can you help the burial societies invest their investments in avenues or institutions that will yield high investment returns? It looks like you might leave here with some clientele.
So I just think that question needs to start with the financial literacy. So we encourage burial societies to be underwritten. So what I mean by that is don't only save your money, get insured. So during the two pandemics that we've gone through, so the AIDS epidemic during the early 90s and then just COVID, we've seen burial societies actually lose money completely as a result of that. So we've said you need to insure and underwrite in order to ensure that there's money when a mortality event happens, right? So that was sort of the main focus, financial literacy touch point we had with groups. And then what we then said is basically look for investments that work. And then us as NASASA, we are a financial cooperative, and through our relationship with Treasury, we have locked what we think are attractive interest rates for burial societies, so low cost, reasonable yield. And I think I need to be quite clear here, and we have been quite aggressive in speaking to members to say, well, you can't make 100% return in a year. You know, so avoid Ponzi schemes, avoid returns which don't make sense. If you're unsure, please call us as NASASA. But we also then have tried to create products internally which can actually provide the necessary yield for members at a low cost.
Yeah, very interesting. Okay, so Juliet, I bring you back in here again. You know, and sadly today we lost we were reporting on a 5-year-old who lost their life yesterday. The issue of spaza shops is a difficult and an emotive discussion because it's cost us young lives. And so the business of spaza shops coming back into sharp focus. And you've got the process to register, re-register in some parts of the country. And of course, the president saying re-register or register spaza shops. Then the president even announcing, a 500 million rand fund to upgrade spaza shops. And of course, the push there is to formalize our informal businesses in the township. Where are the opportunities there? And perhaps you can even speak directly to those businesses that are watching and saying, these are the benefits. When Lesetja Kganyago speaks about interest rates, you can be part of that conversation.
Yeah, no, it is actually said that we still lose lives. We lose innocent lives. But as Jetco's, what we looking at a long-term approach. We know because there was like 21 days, but it's 21 days for people to register, but there's a long-term strategy that goes with the 21 days. And our approach towards this, we have a program that we call Township Rural Retail Revitalization Program. And the reason we're saying revitalization, we're saying in terms of spaza shops, we've always had shops. We've always had the big shops, and we need to learn from those. And the opportunities that we are looking at under the trip, we call it the trip, is that people need to look at how we can start doing bulk buying, whether the very various tuck shops. They're going to go into cooperatives, or they're going to have agreements, whether in a stokvel format, to say we're going to bulk buy for the purpose of being able to get discounts. We are discussing and having negotiations with the likes of Tiger Brands and Unilever. We're meeting them on the 5th of December to say the same discounts or similar discounts we've been giving your foreign nationals, they need to be open to also the locals. So there is an opportunity, and with this reduction in interest rate, that means people can buy more. It then means that people should actually look at the fact that they need to have stock, because one of the problems with a lot of our local spaza shops, for various reasons, is that they would have less stock, maybe because they're not working together. Maybe use this opportunity to say, how do we work together, have more stock, and maximize these opportunities that come with a drop in the interest rate.
Yeah.
But we want a more sustainable process, and we are looking at people who actually have the experience. What you raised about the issue of financial literacy is very important.
Yes.
Because we don't want retailers who live and eat their profits, or who actually don't realize that they need to invest in their shops. Yeah. We need more. We actually need shops or spaza shops to start being franchised. It should be a model, a successful model that can actually be franchised in other areas rather than them competing.
That's quite an idea, hey.
We're hoping to move to that point.
Something that I know we'd all like to see in our township economies. Guys, thank you so much. This has been the most insightful conversation, and I hope that we've been able to educate and empower our viewers as well. Thank you so much to Juliet Miabo, who is the founder and CEO of TEDCOSA, which is the Township Economy Development Community of South Africa, and Ndumiso Kubeka, yes, economist, joining us in studio. Annalene van der Poel with a Debt Rescue, Palisa Kambule with the South African Business Forum. Of course, her line did drop off. But Rifta Ajam, General Secretary of the Federation of Unions of South Africa, or FEDUSA, and of course, Nzika Masondo, who's the CFO of NASASA. An absolute pleasure having you guys in studio. We take a short break. News VPM is back in a moment.